Hello everyone, Andrew here with a new YouTube video. This is a continuation of the series that I made, explaining the simple concepts that you can use in order to start trading Forex and make some profits, of course. This is actually the last video explaining a concept. In this one we're gonna talk about liquidity, and this is actually the last thing you need to know in order to start making money. So what is liquidity? In order for price to move in a certain direction, it needs to take out liquidity. Liquidity is orders, which can be either market orders, sell stop orders, buy stop orders, limits, anything like that. Whenever there's orders in the market, then usually pricing will want to grab those orders and then make a move. So how can we actually spot this liquidity? Well, it's pretty easy. We just need to look for certain patterns. So let's say we have the most basic retail thing, which is a double top, right? You see the double top right here. This is the easiest form of liquidity we can have because you have equal highs and you know that retail traders are going to sell here, right? Because they see the double top and they see the rejection and they want to sell. So what price will do is take out the liquidity, which in this case is in the form of stop losses because you have stop losses of the traders that trade this specific pattern, takes liquidity out, takes those orders out, gets some volume in, and then starts going down in the direction it's supposed to. So this is just the basic example. You also have double bottom, which is basically the same thing, right? Where you have liquidity, which can be even like not a double bottom, can be like multiple touches. Also trend line liquidity, we're going to talk about it next. So even if you have something like this, you know there's liquidity here because there are stop losses placed below here and also sell stops. So there are stop losses of people who are buying, and there are also stop losses of people who are having a sell stop here because they think a big support is going to break and price will start going down. So they also have something like this, and price comes, take the stop losses, gets the entry of the sell stops, and then reverses, take more liquidity to push price more high. Really basic concept of liquidity. Next thing we can have is trend line liquidity, which looks something like this, which is also in the form of range. So basically, whatever you can use. Liquidity needs to be thought of where does the stop loss is, where are orders in the market, and you just need to think outside the box. You need to think that, okay, the market needs liquidity in order to move. It needs to grab liquidity before making the move. So where is the liquidity in this scenario, or where is it situated? Once you identify where the liquidity is, then all you have to do is wait for that liquidity to be taken out, and then for price to actually reverse and go in the direction it wants. So you have trend line liquidity right here. You can have trend line liquidity the other way around, of course. Have a bearish trend line liquidity. Oops, sorry about that. So you have trend line liquidity to the downside, take it out, and then price moves just because it needs to grab the liquidity before having a big move. Once you understand this simple thing that price needs to take out liquidity before making a huge move, you will save a lot of time and a lot of losses because you will actually wait for price to take out liquidity and then move in a certain direction. So how do I identify it in the market? So usually what I do to find out the liquidity is just basically look for those equal wicks, equal bodies, trend line, equal wick, everything that looks like there's orders above or below that price point. Also use the Asia range is also a big liquidity pool because Asia is the weakest session of a day, and usually the high and the low gets taken out for that specific day just because they can't really leave Asia having a high or a low of the day. So what usually happens, you can take this high and the low as liquidity, especially on GU. This is a small drip, ignore this, just a paper trade. Especially on GU, Asia range gets taken out a lot of the times. Like look at this. You have Asia high liquidity being taken, then you reverse, price comes to the Asia low liquidity, and then you have the big move. So that's a pattern that usually happens on GU a lot. Watch here also, take the high because there's liquidity there, and price reverses, gets a little retracement and then dumps. So Asia range can also be used as liquidity in the market in order to actually take a trade. So the way I take my trades is I always wait for liquidity to be taken, or I wait for my POI or order block or whatever you want to call it again to have some sort of inducement of liquidity. Inducement is basically when you have liquidity above or below your interest area. So let's say you have POI right here. If you have liquidity right here as a trend line, equal highs or whatever, this is called an inducement of liquidity because price induces the liquidity right here, reacts from a POI, and then you have that dropped. So it's the same concept as waiting for liquidity to be taken, because this liquidity got taken and then price goes for the next liquidity, which is below this low. So that's a pretty easy thing to do. So now let's wait for and let's watch some examples of this. Okay, liquidity can be on all the time frames depending on how big the move will be. What usually happens during news release is that price will clear out a lot of liquidity. So if we look at this example on FP, we had liquidity right here, right? Had liquidity right there. We also had liquidity at these relative equal lows. We also had liquidity below this Asia low, and we also had liquidity on these little wicks, which are relative. It doesn't need to be exactly equal lows. It can be relative equal lows. It's the same exact thing. The reason why it was a lot of liquidity is because people were really buying EU in this area, because you see the price was moving higher. So retail traders, they usually just enter trades like that. So price was really moving higher, so they were putting a lot of buy positions in. And what price did, of course, it wasn't gonna just go up, because it needs to take out liquidity in order to have that power to actually move to the upside more. So what did price do? Cleared the liquidity, dumped all the buy orders, break even, stop losses, etc. And then price, look what it did. It recovered slowly towards this area, and now it's preparing to make the big move. So that's another reason why I know EU is gonna start moving up, because it just cleared this liquidity, price came back into this range, and now it's gonna range until the news today at CPI, and then price will probably start going up. Take out liquidity again, because we're also building a lot of liquidity. You can see Asia low, Asia low, Asia low, a lot of liquidity. So what price I would like to see do, clear the liquidity and then start going up, similar to what NFP did. So that's gonna be my expectation. Let me know down in the comments if my expectations were right, because this video is gonna be posted during the weekend. So this is today is Wednesday when I'm recording it, so just let me know down in the comments if I was right or not. So now let's look at some examples on the smaller time frames as well. I think we had an example yesterday on GU, which was really nice. Yeah, in this area. So if you look at the 50-minute, you do see some kind of wicks here, but nothing really clear. So if we drop down on the 5-minute, you can see this range being formed. So this is another good example of liquidity. If price is ranging a lot, what it will probably do, because it's building liquidity to the upside and the downside as well, because there's people selling at the top of the range and then buying at the bottom of the range. So there are a lot of orders below, because they also have buy stops and sell stops, right? So there's tons of orders here. You have stop losses, you have buy stops, sell stops, etc. So what price will usually do in this situation, if we have this range, is price will take liquidity on one side and then reverse towards the other side and just die, or retest the range and then die. That's what usually happens. The other way around, takes liquidity, takes the next liquidity, and either retest this to go higher, or you can just do this. Doesn't really matter. You just know that that's gonna happen. So this is exactly what happened here. So let's take a look on the 1 minute. You can see how much liquidity was being built here. So that's why I'm saying, because there were people selling here, having stop losses, trying to catch the big move to the downside. There were also people buying here, trying to catch a continuation trade. And there were also people having buy stops here above the highs and sell stops here just below the low. So you can see how every of this situation, they probably got stopped out, right? The sellers, they were just ranging, then stop loss, one's out. The buyers, again, if they didn't take profit, they just waited for the price to start moving, because they saw like this big impulse move. So they're, oh yeah, I just get a nice retest and then price will continue flying to the upside. So they maybe got a break even or even a stop loss. I guarantee there were some stop losses there. You also have the buy stops, which went into a bit of profit and then reversed. Nobody's securing after 5 pips. Got stopped out. The only guys who actually got lucky were the sell stop guys, because they were just lucky, right? 1 out of 4 situations is gonna be a winner. It's not worth the risk, but in this case, they probably just got lucky, right? So how can we actually use this to take a trade? So seeing this situation, I know it's tempting to like sell or buy, but just wait for liquidity to be taken. In this case, because we just came to this zone right here, you see how we came, had a nice reaction, then price starts retesting. Price showed some sign of weakness here, so price returned to the extreme zone, which in my case was a 1 minute POI. That wick right there, which also, look at this, you see these relative equal highs, which are wicks, but doesn't matter. That's just gonna act as liquidity for my point of interest, which is this week right here, which on the second time frame is actually a POI. So if I see an example like this, and this is an amazing tip that I'm giving you guys, I shouldn't give this for free, but if you have something like this below your POI, then it's a really good POI, because you're gonna have liquidity, that price will induce, take out liquidity, and then start going down. That combined with the fact that we are ranging takes out more liquidity, right? Very, very aggressive, which is another really great confirmation. Price reacts from the POI and then just dies off. And I think the drop was about 50 or 60 pips, if I'm not mistaken. Yeah, 60 pips. So that's an amazing trade, an amazing example of what can happen and how liquidity can help you actually catch amazing trades. So what you can take from this video is to identify where liquidity is in the form of equal highs, equal lows, trend line liquidity, whatever it can be, Asia range, and then wait for price to take out liquidity. Maybe have a POI also, that's a confirmation, that's a good entry point. And if you have liquidity being taken out, then just look for where is the next liquidity. So for example, here in GU, if I see some confirmations for sales, I will enter the sales and then I will target the next liquidity, which will gonna be under this Asia low, because that's where price wants to go to take out liquidity to make the next move. So knowing that, I will just wait. I can have a target, I can have an entry point even here because we took liquidity. We have these wicks right here, which I think will also be taken out before continuing to the downside. So identifying liquidity, understanding how liquidity works is a really good addition to your trading plan, because you will have much safer entries, you'll have better entries, and you also have better targets. Saying that, thanks for watching, and again let me know down in the comments if I was right about the move on EU. Also let me know if you want an additional video of putting all these concepts together with some trade examples, and don't forget to like, subscribe, and turn on that bell notification so I can post more nice content for you guys and help you in your trading career. Don't forget to check fxetrading.com and join our free Discord, the link is in the description. Have an amazing weekend and I'll see you in the next video.